In today's video, I'm going to show you how you can find profitable setups for entries for trading the crypto markets, but not just crypto. This will work on Forex, so it'll work on stocks too. And we're going to deep dive into the reasoning of where the price moves to something, why it moves there, the risk reward entry where we're looking for if we are wrong, we lose 1 unit. If we are right, we gain 3 units or 4 or 5 units, meaning that for these kind of setups, if you can repeat that over and over again, you don't even need to be profitable 50% of the time to be able to be profitable, meaning that you can lose more than 50% of the time and still make money. It sounds counterintuitive, but I'm going to break it down for you. So the reason why this is so important is because on a larger scale time frame, let's say for example you take 100 trades, even if you lose 50 of those trades, 1 out of 2 is a losing trade. That means you still come out ahead and profitable. And this is what most people get wrong when it comes to trading. So I thought I would break this down for you. Hopefully you are going to find this educational and interesting. And hopefully it's going to help you change the way that you look at trading, the way that you look at charts, investing, and setups. And if you do, I would really appreciate it if you share this video, if you give it a thumbs up, if you subscribe to the channel down below. And of course, if you do want to learn more, I've got an entire technical analysis and trading course. It's going to end up being more than 30 different lessons inside the Intelligent Cryptocurrency VIP membership. So if you want to learn more from me and want to get access to that course, become a member. It's the first link in the description down below. 60-day money-back guarantee, so you can go through everything. And if you're not happy, you can get a full refund. But I think you're going to find it very, very valuable once you sign up. So the first link in the description down below. With that out the way, let's dive into today's content. Now, before getting into the tutorial, which we'll do in a couple of minutes, I want to set the stage for you so you have a proper understanding about the type of trading and risk management that I'm going to be talking about when breaking things down so that it makes more sense that way. So we have this quick whiteboard over here, this online virtual whiteboard. So the idea behind what I'm about to share with you with the trading specifically, okay, this is not buy and hold investing. This is when it comes to trading, whether that's swing trading over a period of weeks or months or over days, or whether it's more day trading style where you're trading for literally within a few days or intraday or within hours, or you're scalping. It doesn't matter. It's all the same kind of risk management. So you have your trading account, right? And that can be whatever risk capital it is that you want it to have, whether it's, it's $1,000 or it's 100K, it doesn't really matter. Okay, the principles apply. So we have this trading account. The idea being that on a single trade, every single trade that you take, you want to be risking a maximum of 1%, right? That is your risk. Meaning that on any single trade, the most that you can lose is 1% of that account. So in the case of $1,000, it would obviously be $10. And in the case of $100,000, it would obviously be $1,000, right? This is supposed to be $10 over here. Meaning that the idea here is that you could lose theoretically 100 trades in a row before you completely blow that account. And then actually even more than that, because if you're taking 1% as the account decreases in value, that 1% trade still remains 1%, so it becomes even less as the nominal value of the account goes down. It obviously becomes more as the nominal value of the account goes up, right? So you start out, let's say you start out with $1,000 account, you're risking $10 per trade. If you can manage to get that account up to 100,000, well then your risk per trade becomes $1,000. And of course this is why it definitely makes a difference to the size of your account, because if you have $1,000 account and you're only making $20, $30, $40 per trade, yes, it can add up, but it's very slow. And obviously if you're living in an expensive city and your cost of living is $5,000 or $10,000 or $15,000 a month, it's going to be very, very difficult for you to make any sort of significant income to be able to cover those expenses with a small account, which is the reason why most people blow up their accounts and why they lose money, is because they don't have enough capital, and thus they feel the need to compensate for that by taking more risk. And instead of risking the required, for example, 1%, they start risking 10 or 20 or 30% per trade, because that is only when the money starts to become interesting for them. So instead of risking $10 like they're supposed to with a $1,000 account, they start risking $300 or $500, which is literally like almost half the account. And if you lose that on a single trade, which happens, okay, you do lose when it comes to trading. It is a given. It is not a possibility. It is guaranteed that you will lose certain trades. So if you lose 10 or 20 or 30 or 40, 50% of your account on a single trade, you're not going to make it, right? So the size of the account does make a difference. And I realize that if you don't have capital available, there's not much you can do. You're just going to have to either find a way to make more money outside of trading to be able to fund the account, or you're simply going to have to be disciplined and patient enough to be able to grow that account until it becomes a big enough size where it does become worth it for you. Another thing I do want to mention also is that it doesn't matter if you have $1,000 account or $100,000 or $1 million in a trading account. If you don't have a strategy and you can't manage risk and you are not a profitable trader, you're going to end up with nothing, whether you start with $1,000 or whether you start with $1 million. So you have to have a profitable system. You have to be good with your risk management, and you have to understand trading before you can start risking real money, okay? Most people lose because of these reasons that I've just told you. If you can simply stick to what I've just told you here, that already puts you ahead of the masses who lose money with trading and day trading and leverage trading and spot trading. It all doesn't matter. It's all the same thing. If you don't have that system, you don't have the strategy, you don't manage that risk, you're going to end up losing. So then finally, the third part, what we're looking for in a trade setup, once we determine we are risking only 1% of our trading account, is a risk to reward of at least 1 to 3. Meaning that if you are wrong, you lose 1% of your account. But if you are right, you make at least 3 times that amount. So in this case, with a $1,000 account, if you're wrong, you want to look for a setup where if you are wrong, you get your invalidation, meaning you know that setup is incorrect, you have your stop loss, you take the loss, you lose $10. But if you are right and you hit your target, you make at least $30. Okay? Same thing with a $100,000 account. If you're wrong, you lose $1,000. You know that is your maximum loss you're willing to take if you are wrong with this trade idea. If you are right though, you will end up making at least $3,000 or more. And you determine this before you even enter a trade. That is what I'm about to show you in this breakdown. So this isn't about randomly clicking a button or going with a gut feeling or trying to anticipate a news event or anything like that. Okay? We are looking to understand the charts. Once you have that understanding, then you can look for trade setups. You plan where you are looking for a long or a short entry, a buy or a sell, and you know exactly once you enter at that point where your stop is going to be. So you calculate that loss and you calculate where your take profit is going to be, so that you know all of this in advance before you even take the trade. And once you take the trade, you put in your stop, you put in your take profit, and you just let it play out. And the worst that can happen is you lose 1%, which means that you are well within your risk management, because you can do that 100 times in a row before you lose your entire capital. And of course, even if you lose, say, 5 or 10 times in a row, you know something is wrong with your system. And even if you lose 10 times in a row, you've only lost 10% of your trading capital, which means you still have more than enough capital to recoup those losses. Go back, look at what you're doing wrong by keeping a journal, tracking all your trades, and then going to study more to find a better system that allows you to be more profitable. So hopefully this gives you a nice basis understanding. Now let's move into breaking down the trade, so that with this knowledge that you have now, you will see exactly how you can actually do this on a chart and how you can plan a trade and find these 1 to 3 risk reward setups or better. Again, keep in mind, this is just one video that I'm trying to explain to you here and try and break this down for you as clearly and as easily as possible. There's so much more that goes into this, obviously. So if you want to learn and you want to get access to my TA and trading course, become a member of Intelligent Cryptocurrency, the first link in the description down below, and come and work your way through the course and the training. Join our Discord and be able to get support and ask questions there if you have any of those. Let's move over into breaking down the trade setup. In this video, I want to break down a trade on Bitcoin on the 5-minute chart and show you the reasoning behind the chart and behind the trade from the beginning when I took it, and the reasoning why the setup was here. And that is always the thing that you need to understand. These markets are not random. They move in specific ways. And by trying to understand the price action as much as possible and understanding how markets move, you can try and predict and anticipate trade setups, where it's going to bounce, where it's likely going to move to. And based on that, you can choose setups that allow you to have a higher reward to risk. So when you are wrong, you lose 1 unit, and when you're right, in this case, you can see over here, it was 4.84. So let's just say 4.5, or even a 1 to 4. Usually I look for trades that are 1 to 3 at the minimum, sometimes higher, because the reasoning for that is quite simply, if you're wrong, you lose 1 unit. If you're right, you win, let's say 3 units, which means that even if you're wrong 50% of the time and you play this setup over and over again, risking the same amount, you come out ahead. So you only need to be right, not even 50% of the time, with a 1 to 3 setup to be able to be profitable in the long term. And of course, 1 risk unit is 1% of your account. So if you have a $10,000 account, it means 1 risk unit is $100. If you have a $100,000 account, 1 risk unit is $1,000. So you're risking $1,000 to potentially make $3,000. That's a 1 to 3. Or in this case, 1 to 4, you're risking $1,000 if you're wrong, and you're making $4,000 if you are right. Or if you have a smaller account, a 10K account, you're risking $100 if you're wrong to potentially make $400 if you're right. Okay, so that is obviously the basics. Now let's go and backtrack and actually break down this trade. And just to show you, I'm not actually just doing this in hindsight and showing some theoretical setup after the fact. I actually posted this before the time, so you can see here on Twitter. I will add the link to this below so you can go verify for yourself. But this was the setup, okay, before it played out, before you see it as it is over here. This is exactly the same setup. I didn't move it after the fact. The only thing I did was deleted this red bar that you see over here, the second one. But this one is still exactly where the entry point is, as you can see over here. We are on the 5-minute chart. When I posted it, we were here at this point. As you can see over here, and that was almost the near bottom perfect entry. The reason for that, you can see over here, I said on the 5-minute chart it was a FVG, fair value gap fill, and bounce from here. So obviously this gets more technical. If you have access to the full TA course, I've got a complete lesson about fair value gaps, about supply and demand, and how that actually works. So I'm not going to explain all of that over here. Again, just real quick, the fair value gap is the distance between 3 candles. When you see a gap like this, between the top of this candle and the bottom of this candle, you can see there is a gap. Whereas, for example, with these, you don't really see that. There's more fills there. So when you spot these fair value gaps, after a move to the upside, there's that gap to the downside. When the move retraces in the short term, it tends to fill these gaps and reverse back to the upside. Now, not always, of course, there are other factors you have to look at. So you can't just blindly go and look at those gaps and just blindly take a trade setup. What we do over here is we identify the fair value gap before the time. When it comes to that gap, we have an alert set and we know, okay, this could potentially be a setup. Now we're looking at the 5-minute chart. We actually zoom down into the 1-minute chart at this point in time to determine, is there actually a chance that it is creating a bottom here on the 1-minute chart, or is it actually more likely to continue going lower, and that would invalidate the trade. So we are looking for confirmation before we enter the trade. We have the idea. When the price approaches the idea, we look for confirmation. If that confirmation is valid, then we could take a trade setup. So let me go back to the real-time setup over here, and let me try and break this down for you. Okay, so what we're going to do is we're going to do the replay section over here, and we're going to play it play by play to break it down for you, to show you what is happening here. So at this point, we've gotten this big rally over here in the Bitcoin chart, and keep in mind this is a 5-minute chart, so we are just scalping. This is really day trading. This is a trade that lasts potentially, at most for a few hours, usually even less than that. Okay, so we've got this move up. I just removed everything from the chart to make it real clear, real simple. And on this move up, we can identify, well, if we get a pullback, where is it likely to pull back? And you can see here is a fair value gap. So that is a level that we would be looking, a level of interest. We have no idea if it's going to get back there. So what we do, we identify this, we set an alert a little bit above it. We set an alert somewhere over here. Obviously, I can't do that in replay mode, but in real time, we would set that alert, knowing that if the price action were to come back to that level, we get alerted, we know what we're looking for, and then we can look for a potential setup over here. It is also possible, of course, that it just keeps going, in which case this wouldn't be a valid trade, or it is possible that if it gets to that level, it looks bad and it continues going lower. So you never really know for sure, but you have an idea based on the strategy that I'm following, of course, which is explained in the course, based on the setups that happen over and over again. You know what you're looking for, okay? So let's continue to play out, see what's happening over here. So far, nothing is happening just yet. We have our level of interest, which is, keep in mind, let me put that here, just to see, this is the level of interest. So if we get near here, our alert is going to let us know that we could be looking for something, okay? So the price just continues over here, nothing interesting just yet, nothing I'd be looking to trade right now. Just let it go, let it do its thing, and you can see, okay, so our alert would have gotten hit at this point. Okay, and we got in our level of interest. So at this point, I'm not going to do it right now, but you would go into the 1 minute chart and you would look, is there any signs of bottoming over here? And to be safe at this fair value gap, we would want to enter a long position over here, potentially, in that fair value gap. And ideally, we want the stop to be below the fair value gap. So below the low of this candle, but ideally, to be a little bit safer, I like to take a bit of a longer stop here, just below this level of demand, of this liquidity level, because sometimes it wicks down just to touch this level over here, and if you would have had your stop too tight, you can get stopped out. So obviously, you can try and play it a little bit closer on the 1 minute chart and have a smaller stop, but like this, I mean, the setup is still a 1 to almost 5 risk reward, which is perfectly within what I'm looking for. So if this were to play out, remember we are in an uptrend here too. So what we can see over here is this pullback. If this were to indeed be the bottom, we could expect at least to take out this high, this high, this high. So if we get back to this point, that could be a point where you could partially take profits, right? Or move your stop to break even, or potentially take 20% or 50% off the trade. But it is also completely possible that we run back to this high and take that out. So ideally, that is the target for this setup. And then we can go ahead and continue to play it a bit more. So there we go. You see, we got this little wick over here, actually right to the very bottom of the fair value gap candle, right? So the gap is between those two, the middle candle, the low of the candle was the exact low of that wick. And you would see this even better on the 1 minute chart. Okay, keep in mind here, every candle is a 5 minute candle. But okay, so now we have our trade, we entered our trade on the 1 minute, we've got our stop in. So, you know, at this point, it could still continue lower. And sometimes, yes, you will get it wrong. Sometimes the trade setup will be wrong, and then you just simply get stopped out for -1 hour, which is not a problem because you are managing your risk. You're risking the same every single time. And if you lose 1 unit. But the one time you're right, you make, in this case, almost 5 units. So you can be wrong more than 50% of the time and still be profitable if you follow the system and you manage your risk correctly. So then, you know, we just let it play out and let's see what happens over here. And you can see how much time it's actually spending here at the fair value gap at this level, and it had a second wick here, so even a little bit lower. So if you would have put your stop too tight at the bottom of this fair value gap, you would have gotten stopped out there. That's why I say this is a safer level to put it just below this kind of liquidity level over here. So then we just let it play out, and you can see we got a big run up over here, and this actually ended up taking a long time to play out as a trade. It didn't continue going straight up. That would have been the nicest outcome, of course, for this trade, but instead it actually ended up chopping around here for many hours. You can see up and down, back into the fair value gap, then back up again. You can see what it's doing here. It's just trading sideways for a long time. But even all this time, you can see our entry was almost near perfect. Our stop wasn't hit. We're still in this trade. There's absolutely nothing wrong. So we can just continue to sit here if we want, because the target is still in play. And let's just see what happens over here. And there we go. It basically hit the top of the target, but you can see how long that took and how much of a sideways grind that was. But you know, over here at this point, the target was set a little bit too high. Like at this point, I would be okay actually just taking profits where we got into this zone, this general zone over here. If that was hit, I'd be okay with it, especially when you start seeing these wicks like this on 5 minute, on 1 minute. It could mean, you know, we're looking for potential exhaustion over here, and we might not get that wick to the upside. And at this point, you know, whether you take it at 2619 or you're trying to get the ultimate top of the trade, I'd be okay just exiting the position here with a nice profit, or potentially, you know, just exiting 80% and leaving 20% open with a stop at break even or stop a little bit higher in profit in case it continues going higher than the expected trade. You know, because who knows, maybe it continues to run to like 25,000 from here, and then it would be nice to keep a small portion of the trade open, absolutely risk-free. You've already taken the majority of your profit, and why not? So this is actually how this trade worked out very, very nicely because of the fair value gap entry, right? So you can see now that there's actually a lot of thought behind this and understanding of how the market moves, rather than it just randomly being an entry where you're just like, oh, let me go long, or let me click a button and hope this goes right. Okay, so from the moment that we started planning this trade, we knew what we were looking for. We knew we were looking for a retest into the fair value gap. If we got there, we knew we were looking at a smaller time frame for a confirmation. If we entered the trade, we knew the stop had to be below this level of liquidity, so it is less likely that we get stopped out. And we knew that the target would be at least running these levels over here, which we got down over here, but more likely the top of the range over here, which is exactly what it did. So all of this is carefully planned out, and there's an understanding of how the market moves. It doesn't mean it's going to be right 100% of the time, but based on the strategy and based on the planning and the logic and the reasoning behind this, you can see why this is actually more of a predictable way of being able to do this. There's no real randomness, there's no real luck involved with it. Yes, sometimes you get it wrong, but this is a system you can repeat over and over and over again, where it doesn't matter if it happens to the 5 minute, the 15 minute, the 1 hour chart. This is the setups with the fair value gaps, the liquidity, the risk reward, the risk management, the targeting of things, the zooming in on lower time frames. All of that comes together to create the system that is repeatable and predictable. And if you just follow it and you manage the risk correctly, you don't even need to get it right 50% of the time to be profitable over the long period. And actually what's very interesting, I didn't even look at this, but you can also use this for additional confirmation of entry points, which I also teach in the course in full, by the way. So you could have also actually put a Fibonacci retracement on this entire move. And you can see over here, the golden pocket, the 0.618 to the 0.65 or the 0.66 is the golden pocket. And we actually had that fair value gap pull back and coincide with the golden pocket on this move, giving additional confirmation that this would have been a really good entry with a stop just below, once again, this level, or even just below the golden pocket, the fair value gap, with targeting the upside of the range. Alright, so I hope you enjoyed this. I hope you found it educational and informative at the very least, to give you a better insight of how to go about finding buy and sell entries, and removing that element of thinking it's all completely random, thinking it's all about luck, thinking it's all about guessing or gut feel or anything like that. That is not the case. You can see everything is planned before the time. There is an understanding of how the market moves, an anticipation. There's never any guarantees that it does play out, but it's about probabilities. And when you get those high probability setups based on your understanding of how this works, then you put in your risk management in play. And sometimes you're wrong. Yes, it happens. But even if you're wrong 50% of the time with how I showed you how to do this with this strategy, risking the same amount every single time, 1% of your bankroll, overall you'll still be profitable with that exact strategy. So I hope you enjoyed this. If you did, please smash the like button, share this with your friends, leave a comment down below what your thoughts are or what you're struggling with. I'd be happy to help. And once again, if you do want to learn more from me, I've got a complete technical analysis and trading course. It's going to end up being more than 30 lessons ongoing, adding lessons and examples to that in my Intelligent Cryptocurrency VIP membership. So if you want to get access to that, become a member, sign up. The first link in the description down below. There's a full 60-day money-back guarantee, so you can sign up, go through the entire training, and if for whatever reason you're not happy, you can still get a full refund, no strings attached. But I think once you sign up, you will find it incredibly valuable. So thank you for watching, and I will see you in the next video.